Hey guys, welcome back to another video. I have a really good one for you guys today. Recently, Tesla reported their earnings, actually I believe it was yesterday, and we can see that their stock popped quite a bit from about $140 per share to $160, so up about 10 to 20% in one little jump. And the reason why it popped was because Elon spoke a little bit about a potential update to Tesla's business model that could end up replacing Uber. And Uber actually also recently reported earnings, and we can see that they've recently been killing it over the last year. They're up 121%. And the reason why, as we'll get into in this video, is because Uber actually recently turned profitable for one of the first times in their operating history, and definitely the first time since they went public in 2019. This stock is doing better than the market, which is up 21%, but Tesla is underperforming the market at the moment, and we're going to get into why that might be. But yes, pretty interesting. So we can see there's an article right here that touches on the fact that Elon talked up about robotaxi and its concept and how it might replace Uber and Lyft. We can see right here they point out that Uber Tech and Lyft fell slightly on early trading on Wednesday after Tesla CEO Elon Musk talked up the potential of a robotaxi fleet during the company's earnings call. And they quote him right here when he said, "Think of it like a combination of Airbnb and Uber, meaning that there would be some number of cars that Tesla owns itself and operates in the fleet, and then also a bunch of cars where they're owned by the end user. The end user can add or subtract their car to the fleet whenever they want, and they can decide if they want to only let the car be used by friends and family or only be used by 5-star users or anyone at any time. And then they could have the car come back to them and be exclusively theirs, like an Airbnb. And Tesla plans on holding a key robotaxi event on August 8th. So this is obviously pretty huge. I mean, especially considering the fact that Uber has proven that the market demand for this type of ride-sharing service is extremely high. As a matter of fact, Uber makes money through a variety of means, including ride-sharing, food delivery, freight management, advertising, and some technological partnerships. Ride-sharing and food delivery account for the majority of Uber's revenue and profit. They are competitive to taxi drivers, and in the future might end up being extremely competitive to Tesla's robotaxi concept, mainly because they're a ride-sharing service that operates as a platform similar to the robotaxi concept that connects passengers who need rides with drivers who offer transportation using their own vehicles. And once the driver and the rider arrive at the rider's destination, the rider is automatically charged a fare based on factors like distance, time, and local demand. And then Uber makes money from this transaction by taking a percentage of the driver's income from the ride as payment for its ride-sharing service. I imagine this is something that would probably be very similar to Tesla's robotaxi concept. Then on the food delivery side of things, which obviously is also an area that Tesla might end up contributing to as well, Uber's food delivery service operates by connecting customers with restaurants and stores to deliver food and groceries. Uber then earns money from this transaction by charging a service fee to the customer and a commission fee from the restaurant. And these fees can vary based on the order amount and specific partnership agreements with the restaurant. Then lastly, for other revenue streams for this ride-sharing business concept that Uber provides, they also provide Uber Freight, which connects trucking companies with shippers who need to transport goods, taking a percentage of each freight transaction, and then also through advertising by charging marketers for in-app advertisements. Uber's business model focuses on user growth by attracting users to its platform with competitive pricing and efficient delivery and transportation times. And as I stated at the start of the video, 2023 was the first profitable year for Uber since going public in 2019. So if Tesla is able to launch a similar concept, that would obviously add a ton of revenue and profit to Tesla's already extremely fast growing business model. And right here, as a part of their shareholder deck, Tesla showed a little concept of what the ride sharing service for their robotaxi might look like. You can see right here within the Tesla app, users would be able to summon or hold to order a Tesla robotaxi to come pick them up. It would come pick them up, let them know even the temperature inside of the car, and then drive them to their destination, very similar to Uber. Also, according to Tesla's robotaxi update, the riders would be able to decide what type of music they would want to listen to within the car, which is a service that Uber does not provide. And if all of this is done in-house, obviously with Tesla's vertically integrated business model, then that could end up costing even less for their ride-sharing service compared to Uber, which would obviously end up pricing Uber out of the market. So right here, we can see their financial statements. I'm going to look at Uber's first for their full year of 2023, and then also touch on the results for Q4. We can see that for 2023, Uber's revenue was about $37 billion, which is up 17% year over year from $31 billion. And then for net income, we can see that their earnings were up to $1.8 billion from a net loss of $9.1 billion in the previous year, their first profitable year since they went public. Their free cash flow was also $3.4 billion, up over 1,000% from $390 million in the previous year. And although it doesn't really say it here, for Q4 of 2023, their revenue was about $10 billion, up 15%, and their net income was about $1.4 billion, which was up 140%. So the vast majority of the profitability that came for 2023 came from their fourth quarter. And then of this revenue amount, the majority of it was mobility revenue, which was up 34%, and then delivery revenue was up a little bit less than that at about 6%. Now we can compare that to Tesla's income statements, which were also very impressive. We can see that for the fourth quarter of 2023, or for the full year of 2023, Tesla's revenues came out to about $97 billion, which is up 19% from $81 billion. And then net income was $15 billion, which was up about 19% again from $12.5 billion. Also, the Model Y was the best-selling car in the entire world in 2023. So Tesla is on a rocket ship going straight up right now. And on top of that, a lot of their profitability is actually decreasing at the moment because of their increases in investments in research and development, particularly in artificial intelligence, which we'll get into more and when we look at the Q1 financial statements. But although it doesn't say it here, for Q4, their revenue was about $25 billion, and then their net income was about $8 billion, and it was up about 115% year over year for Q4, and that came mainly from an income tax benefit. So we would obviously like to see a lot of this increase in earnings come from their actual operations, but an income tax benefit increasing earnings is never really that bad of a sign. Then we can see for Q1, their financial statements here, revenue was about $21 billion, which was unfortunately down 9%, but this was mainly due to reduced vehicle selling prices and also delivery disruptions from Model 3 software updates. So that's actually not that bad of news if you really think about it. They're reducing the price of their vehicle, which is obviously increasing market demand. And the more people own Tesla vehicles, the more they'll be able to capture the market. Obviously, Tesla doesn't really operate the same as car companies. Tesla is more like an iPhone with wheels. So they're mainly a software company. And if they're able to capture a large portion of the market, along with their robotaxi idea in the future, then this could end up leading to a stark increase in profitability in the future. We can also see that net income was $1.1 billion, down about 55% from $2.5 billion year over year for Q1. But this mainly came as an increase in operating expenses driven by artificial intelligence investments. So again, if Tesla is able to build out the artificial intelligence for their cars and also for their robotaxi service, then in the future, if they're able to potentially build Optimus, their humanoid robot, and then transfer the AI into that model as well, then that could obviously also end up increasing the revenue and profits for Tesla in the future. So a lot of really good news. Tesla's share price has obviously crumbled quite a bit, but we'll see right now if they're actually presenting a good buy at the current share price. So right here, I have a DCF model to try to calculate the intrinsic value per share for Tesla. I'm using a growth rate of 35%, which I got from this historic free cash flow growth rate calculation here. Basically, they had $970 million of free cash flow in 2019 and about $4.3 billion in 2023, which is a compounded annual growth rate of 35%. So that's the growth rate I'm using here. For weighted average cost of capital to calculate the discount rate, I used this calculator here, and you can pause the video to get a better look at it if you'd like. And then they also have a little over 3 billion shares outstanding. That puts their estimated intrinsic value per share at $65 per share, which means that based on those assumptions, Tesla would currently be overvalued. But keep in mind that DCF model has a lot of assumptions, particularly when you're trying to calculate the weighted average cost of capital. You have to make assumptions about equity, debt, cost of equity, and then also calculate the WACC and then use that as a discount rate. So a lot of moving variables there. You can never be too sure when it comes to DCF models. But if Tesla is able to capitalize on all of the growth initiatives that they mentioned in their recent earnings call by Elon Musk, then they could potentially still be a good buy at the current share price. I tried to do an intrinsic value analysis for Uber, but as I said, this was Uber's first profitable year, so they don't really have much operating history with profitable earnings or free cash flow. So I can't really use a free cash flow model or a relative valuation model because a lot of the ride sharing companies in this industry are just simply not profitable and not free cash flow positive. So unfortunately, I wasn't really able to do an intrinsic value analysis for Uber. But we can see from an industry analysis perspective for Uber comparing them to Lyft and Hertz, they definitely have some of the best profit margins here, a higher gross profit margin than Hertz. Lyft isn't even profitable, so they're kind of out of the running in this comparison. And then they also have about 5% net profit and return on assets. And none of these companies really pay a dividend. So based on this, you'd probably want to give to Uber just because Lyft isn't even really profitable. We can also see that although Hertz has a slightly higher net profit margin, they also have a lower gross profit margin. For Tesla's industry analysis, we can see I compared them to Ford and General Motors. And based on this analysis, Tesla is definitely beating their competition. They have way higher net profit margin and return on assets and return on equity. They have a lower debt to equity ratio and also a higher PE ratio, as well as a higher price to cash flow ratio. So it is very likely that investors are pricing in a lot of future growth for Tesla. Then lastly, I wanted to compare Tesla and Uber to other companies that we've looked at on this YouTube channel. Neither one of those companies, well, for Uber more specifically, I couldn't calculate an intrinsic value per share, but for Tesla, they weren't trading below intrinsic value per share. So neither one of those companies could make it onto this table, but you can see the rest of the companies that were trading at a pretty good share price compared to their intrinsic value. For growth rate, Tesla had a growth rate of about 34% for their free cash flow over the last 5 years. But as I said before, Uber only recently became free cash flow positive, so they weren't able to make it onto this table either. For dividend, neither one of those companies pays a dividend, so neither one makes it onto this table. We can see that for our profitability, Uber was not very profitable and neither was Tesla compared to these companies, but you can see the companies we looked at that had the highest profit margins. And then for Q4 and Q1 year-over-year revenue and earnings growth, we can see that Uber had Q4 revenue growth of 15%, and they also had Q4 earnings growth of 140%. Tesla had Q4 revenue growth of 3% and Q4 earnings growth of 115%. So pretty similar to Uber. Maybe in the future, if they incorporate that robotaxi service into their business, their revenue and profit could grow even more. And then for Q1, so far we've only looked at two companies, Broadcom and Tesla isn't really doing that well for Q1. They obviously had negative revenue and earnings growth, but that came, as we saw from the analysis, mainly as a part of an increase in investments in research and development, as well as a decrease in the selling price of their Tesla vehicles. Lastly, for stock performance over the last 5 years, we can see that Tesla is up 797%, Uber is up 61%. So Tesla is able to make it onto the table in the second place spot, but Uber is nowhere to be found. But over the last year, Uber did return over 100%. So maybe in the future, their stock price might end up increasing even more from here. Let me know your thoughts in the comment section down below for Tesla and Uber. Also, remember to leave a like on this video. It helps this channel grow, so I would really appreciate it, and subscribe to the channel. I'll see you all in the next one.